Good afternoon. Now we're ready to get started here. Okay. On the screen that I'm sharing with you, you can see the today's economic calendar. It should always be one of the first places you go when you're going to get ready to make a trade, any trade, when you're going to look at the markets, because you should know what's coming out or going on in front of us. So we're going to take a look at what is happening today. This is the third week of the month. The third week of the month is a very, very, very light month in economic data. We can see today that virtually around the world there's nothing of any significance coming out. We had some reports released this morning. The CHF is Switzerland, which is the Swiss franc, and it was on their trade balance, which was, you can see if they're in red, they were negative, they were below forecasts. But Switzerland hasn't been doing much with the EU in such a disastrous state. All industry activity came out below what was suggested. That's because that was the Japanese. We know that that's been down because the Japanese exports have been down. We also had a very positive report on the public sector net borrowing out of England. None of these reports, especially if they're in yellow or in orange, are large enough reports to affect the actual currencies. They're just support material. We do have the report on the pound that would have affected the pound, which came out this morning on public sector borrowing. And if you notice here, my highlighter's not staying highlighted, but it came in at minus 10.7 billion, or it was under, and they had expected it at 8.9. So let's get rid of the pen here. Let's open this up and see exactly what was expected. So public sector borrowing is the difference in the value between spending and income for public corporations, the central government, and local governments during the previous month. So what this is telling us is that the austerity program financially has been working well in the UK as far as reducing their net debt. So that's a good thing for the UK, although their unemployment and their manufacturing has been dropping. The overall fact that they have been they're slowly cutting their deficit is a very, very good thing. It's something America has to address. Okay. So we've looked at the economic calendar. Now we do have 3 reports coming out of Canada that are due out very, very shortly, which are right here. Canada doesn't have much in the way of economic reports. So these 3 together, core retail sales are important for Canada, right here. And then we have retail sales and wholesale, which are all part of that same overall report. And then we have, so we have those 3 that'll come out shortly. It might affect the Canadian dollar, but again, it's a very minor shift unless something traumatic comes out. Retail sales have been falling in Canada over the past few months, so we can take a look at what's going to be happening there shortly. So let's go on. So we've taken a look at the retail calendar. So let's go on to see what's happening in the actual market. So we're going to go up to FX Empire, and real quickly let's take a look at some of the currencies. We can see here that the euro-US dollar is trading slightly down at 132.22. It surged yesterday, as we all know, over the settlement with Greece, and now it's moved back down. The Japanese yen against the US dollar is trading up. The dollar's had some strength. The yen is very, very low. It's 79.7365. The pound is slightly down. The pound was up yesterday. It's slightly down at 158.25. We have the Australian dollar, which is down off the highs of 108, and it's trading at 106. Crude oil, as we all know, has skyrocketed recently because of the geopolitical situation with Iran and their announcement they're going to stop shipping to France and to other EU countries. It's a knee-jerk reaction pushing it up because we've known for months this is going to happen, and most of the European countries like Italy, France, that rely on the oil from Iran have shifted their supplies, and it's just a little bit because nobody's cutting out use, consumption, or production. It's just going to shift, and India and China will end up buying more from Iran, and the Western world will buy it from other sources, and OPEC's assured us that they will keep pumping it out of the ground. So it's not really a shortage of supply, it's just a shortage in distribution at this point, and that'll shift itself out. But investors react quickly to these things. The other thing driving up the prices there is manufacturing, and the U.S. markets have shown are increasing somewhat. And also now the settlement in Greece is out there. We're hoping that the Eurozone will start getting back or recovering. But again, it's not enough to throw the markets up that high. It hit 105.25 yesterday. Gold is the last thing. We can take a quick look at it, and what a couple people have asked us to trade. So we're going to go take some look into detail on gold. It's trading at 1738.15. It's up 440. Gold ended the week last week flat, as we all know, at 1725, and then yesterday it picked up some momentum on crude coming up, and it's the old adage: when the U.S. dollar is down, gold goes up, and the U.S. dollar fell against the euro because of the strength of the euro and the European situation straightening itself out. And yesterday, U.S. markets were closed, and that's the other thing we have to remember. U.S. markets were closed yesterday for a holiday, so today is going to be the first time they've had to respond to the settlement of Greece, the geopolitical situation. Even though there's electronic trading, most of the investors took the day off. The institutional investors were closed for the day, and what they do is on a three-day weekend. They try to close out all their positions on Friday, so they don't have to worry about stuff that's happening on a closed Monday. So we're going to see all of that taking in effect today. So a couple of you have asked that we take a look at gold today. So I'm going to click on here the gold, and we're going to take a look at what gold is doing right now. So gold is up at 1738.65, which we can see here on the chart. And let's go to the 1 hour chart. Okay, we see gold over the last few hours has moved upward. Let's go look at the 30-minute chart. And gold has been moving up steadily today. We see a support and resistance at 1737.50. A pivot point is 1738, which is right at a pivot point right now, and then a point of resistance at 1740. So we're above the point of support. So we're trading in a channel right now based on these numbers between 1737.50, 1740.50 support and resistance, and a pivot is 1738.75. Is everybody with me? Are you following me here and what we're talking about? Please type in your screens and let me know that I don't need to explain this a little bit in more detail. Okay, let's see. Everybody says they're following me right along. So let's put some numbers on a chart here. So let's put the 1737.50 on this chart. At this point, let's put the 1740.40 on the chart. At this point, oops, I'm not really good at drawing lines here. Let's see if I can. Nope. Okay, then the pivot point is at right. I did change the pen color, but it didn't seem to want to change to. Okay, so we have, it's too high anyway. I can't erase it. The pivot point should be just about here. Okay, so this is where we are right now on this chart. Okay, let's take a look at some chart patterns. So let's take a look at some moving averages here also to see. Let's take a look at the exponential, the weighted moving average, and put that back on a chart. Okay, so let's draw these lines again. Okay, so let's put these pivot points back on this chart. We had this line of support and resistance right here at 1740.40. We had a line of support at 1738, and we had a pivot point at 1738.50, which is just about here. So what we have is our weighted moving average, we have our line of support, our line of resistance, and our pivot point. Okay. So what our pivot point tells us is when the market seems to hit the 1738.40 or 75, it's going to turn back down. Now it's not going to go below that line of support. It might rise back up to the 1740. We want to watch at this point to see if it's going to pass the pivot point here. If it does, it will push up to the 1740. If it's not going to pass that, it will pivot and come back down to the 1735. So if we want to trade this in binary options at this point, we would go over to, let's follow this chart. Let's go to gold. So look at gold. Gold just pushed to 1740. It just went through that line of support. Okay. So what does that tell you? If it goes through that line of support, it's a number right there. It's trying to push through and stay above. But you see, it's bouncing off of that line of support and resistance. It bounced up to 1740.10 and it fell right below it is 1739. We go back up to 17, and if you notice, if you're watching these numbers, you see it pushing against that point of resistance, and that's why it's called that, because that's what is expected to happen. If it breaks through there, it's going to climb up to the next line. It's going to trade between that next channel. So right now we're right at that little point between the line of support, which was right about here, and the line of resistance, which is right about there. Everybody with me? So we have what could be a very good trade going on right now, because it doesn't seem like it's going to break through there, and it's going to probably hit that and bounce off of it just like it did right